What's going on Instagram? It's Monday, which means, of course, it is the Monday Mortgage Melt once more for the 44th week on the trot. And as you can probably see in the background, I've got a few balloons. Very annoyingly, I don't know what's wrong. Actually, it's coming back round now. There we go. You might be able to see it says "Happy Birthday, Grand Union Finance" on it. It just seems to keep going round and round. There's like no air in this room yet. It's still just going around on its own. I'm not really sure how that works, but there we go. Yes, this weekend was the 1 year anniversary of for Grand Union Finance. We had a nice little shindig on Saturday night to celebrate. It comes back round again perfectly there, everyone had a really, really great time. So it was awesome to celebrate 1 year of Grand Union Finance, and we're almost up to 1 year of doing these lives on a Monday evening or Monday afternoon, I should say. 44th episode on the trot. This is. Which means we've got 8 weeks to go until we get to a year's worth of Monday Mortgage Melts. I hope they've been really, really helpful. I have had a lot of messages, a lot of people contacting me saying how helpful they are finding these live videos, so they're not going anywhere anytime soon. We've had some awesome questions over the months that we've been doing this, so I have no doubt that today is going to be any different at all. I've got to say, one thing that's really, really awesome when it comes to the mortgage market at the moment is over the last couple of weeks, we have been getting, and bear in mind, I'm going to get a lot of emails anyway, but getting a lot of emails from lenders at the moment talking about product changes, and that's a good thing. Product changes in the right direction, improved interest rates. I literally have just had a little look at some interest rates for a client of ours who's just looking to refinance their main residence at the moment, and we've got 70%, 65%, 70% loan to value mortgages on my screen right there. 1.22%. 1.22%. That's ridiculous, and we're almost giving away the money. And we're certainly seeing that knock on. It's not just in the residential market, it's in the buy-to-let market as well. So really, really positive stuff. I think one thing that's continually driving this really incredible market that we're seeing at the moment is, of course, the fact that there's such cheap money out there. Somebody asked me the other day, what's the difference between what's going on now and what happened during the credit crunch, why will there be a different outcome to all of that? And I said one of the big factors is just money. There is more money available at the moment, pardon me, to be flooded into our property market for mortgages and other types of finance as well than there has ever been. We're talking ever, okay, forever. Never been as much money in this market as there is right now. There's over £1 trillion worth of lending to be done. And somebody did say to me though, a lot of these lenders, a large bulk of these lenders, especially in our specialist part of the market, are kind of these challenger banks. The likes of, you heard them before, Precise, Kent Reliance, these kind of lenders. What happens when they start sort of utilising all their cash because maybe they didn't have enough, or maybe they haven't accounted for enough for how buoyant the market has actually been? I'm not getting any murmurings at all of any lenders running out of money. There's only one specialist lender that I think has kind of run out of money a little bit, Gatehouse, but even they've announced they're coming back into the market in the next couple of weeks. So those that had limited funding lines, I do think they're growing, so that's good. So good news for all of you guys that are watching this. Mortgage interest rates seem to be on the decline, which is great news. It means cheaper money, means more options, means hopefully the market will continue to be buoyant as lending continues to be cheap. So there we go. But anyway, guys, we're not here for me to just rattle on randomly about the market. I'm here to answer your questions. The whole purpose of the Monday Mortgage Melt every single week is for me to answer your questions live, all about property finance. So whether it's mortgages, which could be for serviced accommodation, buy-to-let, HMO, social housing, multi-unit blocks, commercial properties. It could be about bridging, it could be about development finance. Anything that you want to ask me, Now is your opportunity to do so. But you might be sitting there going, well, who the hell are you? And why do we care about what answers you're going to give to our questions about property finance? Well, the reason for that is I do have a little bit of authority when it comes to property finance. I've been in the game now for 14 years, and I am the owner and director of Grand Union Finance, who are a specialist mortgage brokerage. I don't like the term mortgage brokerage, it's very limited. Property finance brokerage based in Birmingham and in London that predominantly help investors and developers arrange finance that I've just listed off before there. And as you can see in the background, it was our birthday at the weekend, so I've still got my nice little balloon with our colours on there. So very, very cool. So if you have got a question that you want to ask, please use the little box down here where it has a little question mark in it. The reason for it is if you put the questions in the comments, what happens is, as you can see on the screen at the moment, lots of people are jumping in and out. So whenever somebody joins, then their name pops up and shows me that they've joined. And unfortunately, what happens very quickly then is your question gets lost and I may forget to try and go back and get it. Feel free to comment on anything that I say as we're going along. But if you have any specific questions, please do feel free to chuck them into the question box below. What I do during the course of every Monday is on my stories, I always release a quick story with a question box in there. So if you do have any questions that you want to make sure get to the top of the queue, because we do go through quite a lot of questions on this Monday live, please feel free to jump on there next Monday in my stories and ask a question beforehand, because that will be top of the priority list, if you like. But so we've already got a few questions coming in, so I'm going to dive straight in and get down to it. So as I mentioned before, from my stories earlier on today, question: Hi Sam, if you're using a bridge, can you call yourself a cash purchaser? Thanks. Good question. No is the answer. You're not a cash purchaser unless you're buying with cash. However, one thing that I find is that look, estate agents are great. I think on the whole, estate agents get quite a bad rep. I must admit, I've dealt with a few bad ones recently, but I think that's just par for the course. You know, there's good and bad of everything. There's bad brokers, there's good brokers, there's good solicitors, there's bad solicitors, etc., etc. But one thing about agents is they don't understand different types of finance as much as they think they do, or they want other people to believe that they do, on the whole, in my experience. So generally speaking, if you tell them that you're going to be buying a property using a bridging loan, only a reasonably small amount are actually going to really understand truly what that means, and also the process and how that works. So generally speaking, what I try and do with my clients is when we're using bridging finance, I try and get involved with the agent as early as I possibly can. Generally speaking, how we do this is when they're preparing to put an offer down, and by the way, just a little bit of advice for those in terms of putting your offers down, and I've got this from some of my best clients, I've seen how they do it and it's really, really good, is they'll put that offer down as if they're assuming that it's going to move ahead and get accepted. So they will send everything that they would need, that they know an agent is going to request once that offer is put forward and has been accepted. So they will send their solicitor's details, they'll send their proof of address and ID, and if they've got the funds to show, they will show their proof of deposit. What they'll then probably do is copy me in and say, Sam is going to provide you with our proof of funds for our bridging loan, and he will explain what that is. And what I do basically is we'll have our terms ready and put together. I will send these over to the agent, and I pretty much got a template email that I sent over to them. And I say, hello, Mr. Agent, Mr. Agent, or Mrs. Agent, I should say. My name's Sam, I work for company Grand Union Finance. We'll be helping Mr. and Mrs. Smith with their purchase on this. Please find attached the proof of the funds that we will be using. I'm going to give you a call to explain the process, as it is a little bit different to what you may have come across before. And what that does is it does two things. Number one, it really makes us look incredibly professional to kick things off with, which I think is really, really, really important. So even if, for whatever reason, my clients don't win that particular property, that agent is going to remember them, and they're going to go, I really want to work with these people. They're obviously know exactly what they're doing. They're very organized. I think I can get some good sales out of these people. and they will get in touch and they'll be the first one on their list of new deals that come along. So that's a great little byproduct. The second thing, arguably just as important, if not more, is I actually have a conversation with them. I can talk them through the process of bridging, why they are not cash purchasers, but they are better than mortgage purchasers. I can talk them through the process. I can talk them through when they will expect certain things to happen. And ultimately, what I'm trying to do is I'm selling their offer to the agent. Okay, so lots of you out there will know, agents are always fighting to get as much money as they possibly can. However, have a little think about this. If you think about how much an individual agent, not like the sales manager or the owner of the estate agent or anything, the actual individual negotiator, how much they make percentage-wise off every deal. It's not massive, okay? It's not a huge percentage. If the agent as a whole is getting 1%, let's say, of the sale value, they might be getting like 0.25 or 0.3. So when you think about it, say you're an investor, you're putting forward your offer, and it's 10 grand less than the asking price. Is that agent, what I'm trying to do is I'm trying to sell to the agent. The difference between that 10 grand in terms of how much they take home is pounds, okay? So it's such a small amount of money. What I'm trying to do is sell the fact they're going to get their money quicker. So instead of them hanging on for that slightly above asking price deal, they're going to actually think, hang on a second, Sam's just basically told me that I'm going to be able to complete on this deal in 6 weeks, rather than the standard 6 months that I might have to wait if I'm hanging out for a mortgage. So they're instantly going, I can get my money quicker if I push this. So he or she is going to be going back to their client and he's going to be saying, right, not only are these guys incredibly organised, they're on it, they can do it quickly, I understand the process. We're basically getting them on our side really, really early doors. It's so important. So it will actually not only help them in terms of, our clients in terms of getting their offers accepted, but it will actually get the agent to understand the process a hell of a lot better. Because it would be so much easier for them to say, are you a cash buyer? No, I'm not. They're just going to lump you in the same group as buying with a mortgage. You're not. If you're buying with a bridge, you are so much more valuable to that agent than if you're buying with a mortgage. You are 2 months more valuable to them, because that's potentially the difference in the turnaround time. So in answer to this question, you can't call yourself a cash buyer because you're not a cash buyer, but you are not far off. What you've just got to do is you've just got to make sure that the agent understands how the type of finance you are raising to purchase this property makes you better for them than somebody with a mortgage, because you are going to get them paid quicker. And that's what it's all about. So, Sam, do you deal with demanding clients? Do you have a stress ball? I don't have a stress ball. I do deal with demanding clients, but you know what? I don't think I've ever come across, I think I've only, so I've just saying, we're 1 year old. In the year that Grand Union Finance has existed, I think there's really only one client that I can think of off the top of my head that was more demanding of me than I am of myself and my team. I'm incredibly demanding in a very, very positive way. We put customer service at the height of everything we do. We had 2 completions today, and the first thing I do is I always send out an email to those clients where we've completed deals. And obviously I say to them, congratulations, I'm happy that we've completed. Thank you very much for trusting us with your application. But I always say the same thing. We want to improve. Tell us what we can do. Don't feel bad. If there's something that we haven't done that did not meet your expectations, or even if you've got any ideas where even if you were happy, even if you've got any ideas on how we can make things better, do it. Please tell us, Sorry about that. Just had a call come through. So I don't know why I've got my phone on Do Not Disturb, but there we go. So yeah, always pushing. I'm a massive fan of Jeff Bezos in his philosophy on customer service. Amazon, in its current guise, is how it is because of Jeff Bezos's lust for better customer service. He was always thinking from a customer's point of view, how can things be done better? And we're doing exactly the same thing. So no, I don't have a stressful, and I do have demanding clients, but no one's as demanding of me as me, I find. But let's get straight back into some more questions. So Kwama Hussein says, are you seeing clients putting on hold projects right now due to issues in construction with material shortages and increased prices? And if there was less people doing projects, what effect would this have on the lending market? I have to say, I haven't actually seen too many disruptions at the moment with lack of materials. We do quite a lot of development finance, or a lot of our clients anyway will organise, even if they're getting bridges, we'll be doing some sort of refurbishment. But no, on the whole, haven't really seen too many delays. There's been 2 or 3 where, I mean, when we're saying delays, you know, I think of a delay as like weeks. I've had delays with certain clients where the work has taken a few days longer, you know, maybe a week longer. Only one really comes to my mind where there has been a delay, but I think that was down to problems with the builders rather than shortages of materials. So I think I don't think that's really seems to, from my perspective, seems to be causing any problems in the market at the moment. I think really where I see delays are more in my part of the process, in the application process, in the acquisition process, which is is because lenders are really busy, brokers are really busy, surveyors are really busy, solicitors especially are very, very, very busy. And obviously we're heading towards at the end of this month, the end of this first tier of the stamp duty holiday. So obviously there's going to be a lot of people that are battling to try and get deals done before then. We've got one in particular that we're really trying desperately to get done before the end of this stamp duty holiday, because it is a little bit above the standard amount. So yeah, it's that I'm seeing that's causing delays, not necessarily anyone putting projects on hold or anything like that. No, I guess maybe I'm lucky. A lot of my clients seem to be pretty on top of things. So no is the answer to that question in a nutshell. Next question from GP Hill. Is it worth putting a pack together for the revaluation, or will it just annoy the valuer? This is a great question. So there's 2 things to think about here. The first is, are we annoying the valuer? And I think the answer to that is, if he or she is going to get annoyed by anything, they'll find a reason to get annoyed. The surveyors are very proud people, and they don't like being told they're wrong. So the other part of what I was going to say there is, because I said there's 2 things. The other part is basically I think it's a mindset shift. Okay, so if we're providing, so usually we are effectively sending a surveyor out to view a property to say, please can you tell us how much you think it's valued at. Now, if we put together a evaluation pack, which will have, sales comparables, it will have proof of it will have evidence of the work that's been done, it will have a breakdown of the schedule of works and all the costings and everything like that. The mindset shift is, instead of us saying, please can you tell us what you think that property is worth, it's, here's what we think the property is worth, prove us wrong. Because if they then can't come back and prove that the information there is incorrect, they have to give us the valuation that we have suggested. So that, for me, is one of the reasons why it's so important. Do you know what? Valuers, if they're going to get annoyed by us giving them information, then they've got a serious problem. In my experience, actually, they're in the minority. Think of anything. Any one of you that's watching this video right now, you all have a job to do. I have a job to do. And part of my job, as an example, is to look through people's documents and check credit files and all this kind of stuff. Now, if I've got a client that, when I give them a list of everything that I need, they send it through to me pretty much straight away, and they don't ask any questions, they just go, right, here's my ID, and it's perfectly done in PDF format. They send me through their address, perfectly formatted. They send me through their proof of income, their proof of, their bank statements and all that kind of stuff. And it's absolutely perfect. The evidence of their deposit. They send me everything that I need Don't you think that makes my life so much easier? So it's exactly the same thing with valuers. If we're giving them all the information that they need to look up anyway, they're going to do it, but it kind of almost saves them a bit of a job, and it should be easier. I take that same philosophy into lending. You know, when I'm thinking about underwriters, I'm thinking, how can we make the underwriter's job as easy as possible? A lot of other brokers, I find, unfortunately, really kind of get a bit funny, like, oh, you know, no, we're just going to chuck stuff over to the underwriter. It's their job to pick it apart and do it. No, it's not. It's our job to make their life as easy as we possibly can, because then, you know, they've got an easy life, and it means that they can just, you know, if they're going to do like 4 applications in a day, our one is the one that's the easiest one. They can rubber stamp it, and they're like, oh, that's an absolute godsend. It's exactly the same. No matter what you do, the easier someone else makes your life, the more likely you are to, you know, to be happy. And if somebody gets annoyed by that, that's kind of their problem. So I guess, you know, we kind of just, we've got to go with the majority. And the vast majority, I think, don't get annoyed. And actually it helps most of the time to put one of these valuation packs together. So it's a very, very good idea. And I encourage anyone who's looking to get a good revalue soon to do one, definitely. So a few little comments. Chris, hey mate, haven't been on these for a while. Hope you're good. Yes, I'm very good, Chris. Thank you. Sandeep, hey Sam, hope you're doing well. Really good, Sandeep. I hope that you are absolutely awesome as well. Vivi, hey Sam, what's going on? Okay, let's get back to the questions. Okay, how difficult is it to get an SA, serviced accommodation, a mortgage? It's not difficult. There just isn't a lot of choice. And what I'm kind of discovering more and more, actually, is that, and this is kind of, I almost, like, to a degree, I'm going against some of the things that I've said in the past. I'm always the first person to hold my hands up and go, things are changing. I was wrong before. Now it's like this. I used to sort of be quite, I used to get quite frustrated that the market for short-term lets, I described it as the Wild West. I still think it is the Wild West to a degree, but I think what we're finding is that I always used to say, oh, you know, the SA market is kind of like the HMO market was 5 years ago. I'm starting to realise, actually, I don't think it is. I think it's a completely new thing unto itself, because within that sort of short let market, you've got sort of almost, I think we're starting to see 2 separate types of products here. We're starting to see holiday lets and serviced accommodation. Now, serviced accommodation is a very small part of that overall. The holiday let part of that market is a lot more mature and has been around a lot more time, and therefore there is a lot more kind of more standard criteria. So as an example, someone was asking me the other day, how do they work out what the rental income is going to be for the rental calculators? Well, on the SA side, it's actually quite difficult. It's a bit all over the place. Holiday let side, we kind of know, which is that we will look at a 30-day average. So because 30 days roughly in a month, 30-day average of a high, medium and low market rates. Okay, so low, medium and high season rates. So we can go to someone like Sykes Cottages, for example, who are like a specialist nationwide letting agent, if you like, for holiday lets, and they'll be able to give us this information, and lenders will be able to take this information, put it into their rental calculator, and they'll be able to work it out. On the serviced accommodation side, and generally speaking, by the way, the holiday lets, the lenders like to see that they are holiday lets. They're not like in city centres and stuff like that. They kind of, you know, they are for people that want to go on holiday to Cornwall or the Lake District or whatever it might be. Then on the serviced accommodation side, what we're finding is actually more and more lenders are just looking at what would the property be rented for on a standard AST, single unit, standard rate AST, on a normal month. And if that fits within the rental calculator, they will just lend the money. So we're starting to see a distinction between these two products, and actually lenders are starting to use the terminology Airbnb, Booking.com, serviced accommodation. So I do think we're starting to see a split. I was having a conversation with our contact at Interbay, who are a commercial lender who have just released the cheapest holiday let mortgage on the market. It's 3.84% for a 2-year fixed rate, 70% loan to value though. yeah, he was saying, because I was talking to him about service accommodation, I was saying, I think you should really push this, like it's a massive part of the market. And they were like, Sam, it's not what this product is for. It's very specific to holiday lets, and it got me to thinking that actually I do think that we're kind of, this part of the market is splitting out. It's almost like subsections of the short let market. So various different lenders will have specialisms in each side. So it's getting there. We're starting to see some maturity in this market. But in answer to your question, Zeshan, it's not easy. It's not hard either. You need to know where to look. We just don't have a lot of options. And when you don't have a lot of options, it means that if there's something in terms of your personal situation that is outside of, nothing to do with the criteria to do with the short-term let aspect, but your credit file isn't that great, or you don't have a lot of experience, or whatever it might be, it just means that the choice is less. And that can always mean that the interest rates start getting pushed up, and it just means that it could end up being quite a difficult property to then mortgage, which obviously is an issue. So answer to the question is, how difficult is it to get an SA mortgage? It's not difficult. There's just not a lot of options at the moment. So with every difficult aspect that we come along to, it just means we've got fewer and fewer lending options. And when you haven't got me to start with, that can be quite a tricky thing. So thanks very much for your question. A really, really good one. And I'm going to definitely be doing some more videos soon on sort of holiday let stroke service accommodation. I think it's something that I need to do a lot more content on. So if you guys would be keen on something to do that, give me a thumbs up in the comments. In fact, any videos that you think I should do, or any topics that you think I should do videos on my YouTube channel, stick them in the comments. I'm always really, really interested to see what you guys think I should be doing more content on. But back to the questions then. Do you have examples of a valuation pack? So Chris Gregory has asked, do you have an example of valuation pack? I do. If you send me a direct message with your email address, I'm happy to share that with you. But I can run you through how I see the perfect valuation pack, sort of the layout anyway. So we would always kick off with a little bit of detail on the front page about your company, what you do, that kind of thing. Keep it to one paragraph, and then we do a little overview of the project itself. The address, maybe a picture of the front of the property, together with what you bought it for, when you bought it, how much the work you've done, and what you envisage the valuation to be now, and what you're going to be renting out for if you haven't started renting it already. So that's our first cover page, if you like. Second part is going to be our schedule of works. It's going to be a breakdown of all the works that's been done, an itemized schedule with costings next to it, giving us a total costing for the entire project. On that page, we'll probably want to include some details on who's done the work as well, especially if it's a really professional contractor. That just adds a little bit of weight to the fact that it's been done to a quality standard. Next page, we start doing some before and after, and you can also add in some during photos in there as well. Some advice I gave to a client earlier on who was putting together one of these was do them room by room. Don't do all the before, all the during, then all the after. Do living room, before, during, after. Dining room, before, during, after. Bedroom 1, before, during, after, and take the photo from the same place in the room each time, because that's really easy then for the valuer and the underwriter, because the underwriters have a look at them as well, to be like, right, okay, it looked like that before, then they changed it, and now look, that's what it looks like now. They can really see a comparison between how you bought it and how they're going to be going in and valuing it. So it's really, really important. Nice little tip there on what you should be doing with the photos. If you've changed the layout, next stage would be to put in a before and after floor plan. That's always very, very helpful, particularly if you've done an extension. That's going to really show the increase in the overall square footage. If you have increased the square footage on each of the floor plans, write the square footage and then write down the increased square footage, because don't forget, if the surveyor struggles to find comparables, they're going to be looking at the average price per square foot. So if you put in the differences, if you have added square footage, might be that you've gone into the loft, for example, make sure that they are aware of that, because they may go in and not realise that you are the one that's actually done that extension. So they'll look at it, oh, you bought it for 200 grand, you now think it's worth 300. Well, why is that? Well, actually, it's because we added, some actual square footage to this property, which is added to the value. So make sure that's what goes in next. And then last but by no means least, we need some sales comps, some sales comparables. In there, realistically, you want to be keeping within the same postcode, barring the last sort of 2 digits. So realistically, a quarter, half a mile if you can. Properties that are of a similar standard, same number of bedrooms, same square footage as yours from within the last 6 months. That is the parameters. They are the parameters that valuers will set, okay? So I get people coming back and going, well, it's going to be hard to do that. Well, that's what valuers are going to do. So if they can't find them, they will start working out, pounds per square foot, average pounds per square foot in the area for 3-bedroom, 4-bedroom houses, whatever yours is, and they're going to use that to help themselves out. But they're still going to put sales comps in there. So even if they have to go out to a mile and a half, they will do that. So do that. Don't go further than 6 months. It's got to be within the last 6 months, but we want 3 or 4 in there that prove that your property should be worth what you are. Don't put properties in there that don't prove it. I had a client send me an appraisal recently from an estate agent, and I literally, when I read it, I just thought, what the hell is this crap? They had said that the value of the property was something like 700 grand. The best sales comp that they put in there was something like 600. And I thought, well, how the hell can you tell me that this property is worth 700 when the best sales comp you can come up with is 600? So make sure, because that's an easy get out for the surveyor. Then they can look at that and go straight away, yeah, bollocks, this ain't gonna stack up. So they'll just go in for that. Make sure that your sales comps actually stack up and actually prove that the value of the property is what you want it to be. So that, in a nutshell, is what we need to put in our valuation pack. Also, do you know what? Make it look good. Make sure there's no spelling errors. Make sure it doesn't look like a kid's put it together. If you've got branding for your company, put it on there. Make yourself a template that you can go in and you can just change the details on, because you're going to be doing these time and time again. And trust me, it makes a difference when they look good. Okay, so that's what I would advise doing. So, on to next question from rkmproperties.nw. Is it possible to get a bridge on an unmortgageable property, i.e. no bathroom, kitchen, as mid-refurb? The answer to that is yes. I've literally sent out a proposal today for terms on a property that has an unmortgageable kitchen. It doesn't have a sink in it currently. Bridging lending is there for these exact purposes. On my podcast, Game Alone's podcast recently, I had someone called Jamie Pritchard. Jamie is famous within our industry of being the sales director, one of the directors at Precise Mortgages for a long period of time in their bridging department. He's now working for a company called Glen Hawk, and he said something really, really interesting on that podcast, was that bridging is a need-based product, not a want-based product. And I thought that's a really good way of describing it, because bridging is relatively to mortgages expensive. That's not comparing apples with apples, but a lot of people do it. So we know that it's a little bit more expensive. So you're not going to choose it over a mortgage unless you have to. And one of the reasons that you would do that is for properties that are unmortgageable, properties that are mid-refurb. We completed on a bridge for a mid-refurb project recently, and they're sending surveyors out there knowing what they're going to look at. They're valuing the property accordingly, and that's what they're going to do, basically, is they are going to be able to look at it objectively and go, right, this property is worth X right now. Yeah, you know what? When you start this work, sometimes it dips the property value down. If it is unmortgageable, it might dip the value down a little bit, but the whole purpose of this type of finance is it is flexible enough to allow us to get the funding on these kinds of properties. And the thing is as well, this is a good tip for you. Whenever you see cash offers only, it's probably because, and this goes back to what I was saying earlier on about estate agents not understanding how things are financed. The agent is going and saying, this property is unmortgageable. That means we can only accept cash offers. No, it doesn't. It means you can't accept offers where they're getting a mortgage. So look out for those properties where it says cash offers only. call the agent and ask them why they're cash offers only. Chances are they'll say, well, there's no bathroom in there, so it's unmortgageable. You can go, brilliant. Well, I don't need a mortgage. I can buy this property using a bridging loan, and they're going to go, I don't think that's going to work either. And you can go, well, hang on a second. Here's Sam's number. Give him a call, and he'll educate you about bridging. Don't do that every day of the week because I've got other stuff to do, but. I do this pretty much every day. I speak to agents all the time and educate them on how bridging, actually, estate agents should freaking love bridging because it gets them what they want. As I said earlier, all agents care about is getting cash in the bank at the end of the day. They'll do whatever's needed to do it. And once I see that the certain agents understand bridging, they suddenly realise that it's their best friend, and they will be able to open up their sort of buyership to more and more people who might have opportunities of using this type of finance, rather than just focusing on people that have the cash to buy these properties outright, particularly if they're expensive properties as well. So a little tip there, look out for properties that say cash offers only, because chances are the reason is because they think they're unmortgageable, so therefore they think they can only accept cash offers. Not the case at all. So I hope that helped, guys. Let's move on swiftly to the next question, because we have got a ton of them come in. So Jay Imperial has asked, do you have any recommendations on bridging lenders? How do you know who is top tier? I'm not going to give away all of my secrets. To be honest with you, we use a lot of different lenders. Various different lenders will have various different appetites. I was talking about Roma recently, who were always kind of one of my go-to, little loan lenders. Pardon me. They were always one of the ones that were really, pushing for doing those smaller loans that are really going to help out with those smaller northern buy, refurbish, refinance. And they're kind of letting us down a little bit at the moment because they're really trying to push for the sort of the 100 grand plus loans now, and they are making people pay quite through the nose for anything under 100k. I sent them 2 deals in the space of 2 days recently. One was just above 100k loan size, and one was just below. And the difference was the one above, they gave us a 0.75% monthly rate, and below they gave us 1.15% per month on a monthly rate. And I went back to them, I said, come on guys, that's pretty rank, isn't it? That's not nice. You guys have always been the one that's helped out the smaller guys. So what's happened. In terms of bridging lender recommendations, there's a lot out there. The problem that we have is I could reel you off a list of bridging lenders, but the lenders to use makes a big difference when it goes to your personal circumstances. So there are certain lenders out there. So I've just mentioned Roma. I would use Roma for a certain type of inquiry, a certain type of project, a certain type of inquiry. I wouldn't use them for something else. So unless we know exactly what the situation is, it's very, very, very hard to sort of just say, yeah, here's some recommended bridging lenders, because the recommended bridging lenders will be very much in line with what your personal circumstances are. So if you want to have a chat about something very specific, more than happy to do so. Send me a DM and we can do that. So Napa asks, how can I become a mortgage broker? Well, first and foremost, why the hell would you want to do that? No, I'm only joking. It is very, very stressful, but it's also very, very rewarding. I actually think that the life of a mortgage broker is very hard at the beginning. It's one of those industries where it's your first 2 or 3 years are hard. You're really learning the ropes. You're really learning the processes. You're not just learning. You're learning how to speak to clients. You're learning if you're in my part of the market, learning different property investment strategies. You're learning about various different types of products, residential, buy to let. You're learning, what the criteria are, how different lenders work, the process of actually applying for a mortgage, what kind of documentation you need in order to satisfy the underwriting. There's a lot to learn. Least of all, before you're even allowed to give any advice, you've got to pass 3 exams, which is 1, 2, 3 more than estate agents have to pass, just as an FYI. and they're quite difficult. Ruby, our sort of, well, she's our senior case manager. She's currently doing the revision for her first CMAP exam, which are the exams that you need to take, and yeah, she's not finding it very interesting at all. There's a lot that you need to learn, and in those exams, they're actually not very relevant to the life as a broker. So in terms of becoming a broker, Napper, what I would suggest is, and by the way, because I know a little bit about your history and what you do, obviously you are an investor, and a lot of investors think that maybe going and doing your exams and being a broker could be helpful. Don't do it. You can't do it part-time. You're either in it or you're not. So it's why a lot of people ask me, why are you not going out there and investing, on every other week with all the knowledge you have of how to invest in property. That's part of the long-term plan. But right now, if you want to be a good broker, you've got to be in it 24/7, especially at the start. Once Ruby gets qualified and once we build her team out, maybe I will have more time to be able to go and, do the other part of the business, which will be to invest. But right now, my clients need me. You need to be in it 24/7. You need to really, really know. I think you have to do relatively high volume of cases so that you keep your finger on the pulse for how lenders are dealing with things. At the beginning of the year, for example, precise mortgages were absolutely flying in terms of how quickly they were doing their applications. So were foundation home loans. Now, both of them are struggling. And we only know that because we're submitting applications on a regular basis. So you've got to be in it 24/7 to start with, at least for the first 2 or 3 years. Get fully involved in every single facet of the process. Money should not be your priority within the first couple of years. Whenever you see these companies, they're like, oh, you can earn 60 to 100 grand in your first year. Yeah, whatever. Don't worry about that. 30 to 40 grand is absolutely fine. You need volume. You need to learn by doing volume. You need to learn by doing and being involved with as many cases as you possibly can, speaking to as many clients as possible. So go and work for a brokerage that can promise you high volume of leads. When we're going to be looking for our first official broker to come on board within the next few months. And he or she, what I'm going to be saying to them is I want somebody who is hungry to do volume business. I don't need somebody that's incredibly experienced. I need somebody who has got the drive to want to work and do look after as many clients as possible, basically. So in a nutshell, how can I become a mortgage broker? You might not want to, if I'm honest. You might, if you're not going to put 100% into it, and it's just going to be a kind of a side project, then you might want to rethink that. But in terms of actually how to do it, find a brokerage to go and work for that will give you high volumes of leads, so you can learn as quickly as you can. Okay, guys, if you've got any questions, make sure that you're sticking them down into the question box below. Let's move on. So Fox Dean says, hi Sam, if you're doing a right to buy at the moment, will getting a bridge loan be difficult? Good question. Not really. If you're going through a right to buy, so I'm trying to think from the point of view of the local authority, will they be the ones that won't be happy with you taking out loans elsewhere? I'm assuming that when you say getting a bridging loan, you mean that on a separate property. I'm not sure if there's any restrictions on buying other property once you are going through your right to buy. I think there's just restrictions on what you do with the subject property for a period of time. You can't rent it, you can't refinance it, or you can't sell it, I don't think, within a certain period of time. But getting a bridging loan out elsewhere, I don't think there's any restrictions on how you actually, or how many other properties you can buy or any other transactions you're involved with. And from the bridging lender's point of view, they're going to be happier that you own your own home. So if you're going through the process of right to buy, or you recently have gone through the process of right to buy, that's actually going to be seen as a positive from the bridging lender's point of view, because you're going to be a homeowner. So that's a massive positive. Hopefully that was helpful, Fox. Just going to get through these now because we're running out of time a little bit and there's still quite a few to come back to. So Basman says, hey Sam, can you shed any light on right to acquire mortgages, please, to purchase your housing association home. So that's quite handy. Following on from Fox's question just then. So basically how it works is you will get a certain discount, and you have to get a specialist mortgage for this, guys. Okay, so it's not, you can't just go to any mortgage lender and just get any residential mortgage product. They will be specific right to buy products, and effectively what they are is they're mortgages based on the open market value of the property, not how much you're buying it for. So say, for example, you're buying the property for, the property's worth 200,000 and you're buying it for 150,000, you can get a 75% loan to value mortgage on a right to buy product based on the open market value of 200,000, which means you actually get a mortgage for 150,000, which essentially means you don't have to physically put down any money. You can just get a mortgage for the full amount. So that's how you use them. You have to use very specific products. Like I said, I think Halifax do them. I think Nationwide do them. A few of the high street banks do them. They're not sort of massively, accessible. There's not millions of them, but there's at least double figures worth of products out there, so there should be enough, and it's all going to be down to affordability. Income versus expenditure, surplus income. Is that going to be enough to cover your mortgage payments at the end of the day? So that's what it is. But the good thing, Bazman, is that if you are buying a, say a 25% discount, so you're getting a 75% loan to value mortgage, then it's going to be 75% loan to value rates, which is really, really good, because a lot of people are going for 90, 85% loan to value products, high interest rates. 75% is a lot better. But of course, if you do actually have some money to put down as a deposit and you could get it down to say 60% loan to value, that's just going to be even better, and your mortgage rates are going to be lower and they're going to be a lot more cost effective for you. So hopefully that helps. So I'm just getting through these at a rate of knots now. So KNF says, how important is a separate income to secure a bridge? Thanks. It is quite important. So when we're looking at bridging finance, particularly when we're looking at the buy, refurbish, refinance strategy, experience is pretty important, okay? Lenders will look at experience first. Have you done these kind of refurbs before? If you haven't, a lot of lenders will just say no. We also have to look at the project itself. We've got to look at, do the numbers stack up? Is there profit margin in there? And they'll also look at what kind of assets you've got in the background. The fourth part to this is going to be the income. So if you fall down on a few of the others, i.e. maybe your experience, you don't have any assets in the background, pretty much as a prerequisite, the deal has to stack up, because if it doesn't, you're not going to do it. But in terms of that triangle of things that you cover which is assets, income, experience, if you don't have any experience and you don't have any other properties in the background, but you have a really strong income, that could be the one thing that gives lenders the comfort to lend you money on a bridge, even if you fall down on some of the other aspects. If you fall down on all three, it's going to be quite hard. But if you fall down on just one or two of those, the other ones will be there to pick you up. So in terms of your question, how important is a separate income to securing a bridge? It can be the difference between getting it and not. It depends on the other aspects to that, in terms of actually whether you're gonna, whether you've got maybe some experience in the background, etc. Which all of these things, all they do is they add weight to your argument, to your situation, to your proposal for having finance. So hopefully that helps. Sorry, I'm getting through these very, very quickly now, because we're definitely running out of time. So we're on to our last question from Tucker, which is, if buying a house but wants to convert it to multiple flats, do I require a development or refurb loan? Not necessarily is the answer to that, Tucker. It all very much depends on how much the cost of the works is likely to be. Okay, so funny enough, speaking to a client about this earlier on, I say, genuinely speaking, you're not going to find any lenders that are going to do development finance where the cost of the works is 50 grand or less in general. And realistically, unless the works that you're doing go to around sort of the 80 grand mark, again, it doesn't, with all the added extras and costs and whatnot, it doesn't tend to work out as well as just getting a straightforward bridge. So generally speaking, if you're doing a conversion like that, you're buying a house, converting it into multiple units or multiple flats, development finance certainly can help. But realistically, as long as the cost of the works is 80 grand or more, that's when it's like that tipping point to when it's worth going for the development finance over just getting a straightforward bridge. You can get a straightforward bridge as long as you can show to a lender that you have enough money to cover the cost of the refurbishment stroke development. One thing to be wary of in terms of bridging finance is that if you're doing this conversion and say it's going to cost you 100 grand and you're splitting that into 3 stage payments, what a lender will do is not only will they need to see that you have got enough to cover the deposit, but they will actually ask you to make the first payment. They'll ask you to cover the costs of the first payment, basically. So first 33 grand, you will need to cover, and the payments are then done in arrears. So they'll pay you back, then you'll do another one, they'll pay you back, then you do another one, they pay you back. So they cover 100% of the cost of the works in total, but it will be done in arrears. So that's just one thing to be wary of as well, which can mean that you actually end up needing quite a lot of money anyway to put into the deal, even if you're going for development finance. So just something to be wary of. Right, there we go, guys. We've gone through all the questions. It's been quite a long one today. 50 minutes of as much information as you can cram into 50 minutes when talking about property finance. So I hope this has been really, really helpful for you all. If you have, give us a thumbs up in the comments. Don't forget, guys, lots more information about property financing. All of its, guys, is over on my YouTube channel. Every week, I'm sticking new videos up there talking about loads and loads and loads of different topics. So if you haven't subscribed to my YouTube channel yet, please do me a massive favor. Click the link in my bio and go over and subscribe now. Check out some of the videos, comment on some of the videos, share them about. That would really help me out. And of course, every single day on Instagram, I am posting new content. Even over the weekends, I'm posting new posts every single day with hints, tips, little carousels with loads of little lists of things that you need to remember when it comes to bridging finance or development finance or other type of finance. So don't forget to go onto my page and actually click on the little 3 dots at the top, which will allow you to turn on notifications for when I post. Generally, I post early evening, sometime between 5 and 7. So every single day, brand new posts coming at you. Do like, comment, share about, help me out, and we can grow this page out and build like a really good community of people. But for now, guys, thanks ever so much for joining me today. It's been really, really awesome. The questions have been absolutely fantastic as always. And then from me and the birthday boy, or Grand Union Finance, as I call it. Thanks very much. Have an awesome week. And I'll catch you again for the 45th Monday Mortgage Melt, which will come to you next Monday at 5 p.m. I shall see you there. Have a good week, guys. Bye.